Hi there, traders. This is Brad Gilbert with the weekly kickoff for January 22nd. All right, now we've got lots of things happening now. If you were trading last week, I was sort of having a look around here and there, but not really getting involved. We are seeing a lot of big numbers come out, and they are setting us up nicely for some good trading opportunities, right? And it takes time for the technicals and the fundamentals to build. You got to remember that. But just coming through last week, right, and then I'll tap into where we are this week. The core things that were happening, it's like a bit of a mixed bag, right? Because you had UK unemployment pretty good, lower rate, the rate as expected, employment change slightly better. Okay, then you've got the inflation numbers there out of Canada, pretty much on par as what was expected. So no significant changes there, right? So, but then you sort of scroll down through the week, we get into sort of like Wednesday. And don't forget, Wednesday, Thursday, Friday, Wednesday, Thursday, your prime trade days. And that's where a lot of big data comes out. Got a bit of a mixed bag here with the Chinese data. And that's important for the Aussie and Kiwi. To me, the secondary numbers, like retail sales now across the board, are sort of taking over, right? Inflation numbers are sort of changing here and there, but we are seeing the second tier numbers that build the data around the inflation numbers significantly changing, right? So that's the weaker retail sales there puts downward pressure on Aussie and Kiwi. Then you look at the inflation numbers here out of the UK, right? Slightly better than expected, right? That's keeping sterling pretty buoyant. Then you come into US retail sales. Once again, this is leading towards a few Fed officials coming out and saying, you know what, maybe we don't cut rates in March. And the market is rolling back the prospect of a rate cut sort of almost to May, right? So the dollar's going to remain buoyant whilst that's in play. But that sets us up. All we need is significant change in the data, US numbers, and that'll change. US industrial production numbers were also slightly better, okay? But this isn't the big stuff that I'm sort of about to get to, because you get into Thursday, right? This is what I'm talking about, where second tier numbers really start to sort of reveal the underbelly of the market, right? In Australia, the unemployment rate 3.9%. Yeah, that was forecast, but check out the actual change of employment, and the big significant part to that, if you're not sort of aware of how these numbers work, full-time employment, right? Very structured, holiday pay, sick pay, health cover, all sorts of things. A big number down. This is like one of the weakest numbers I've seen in the last couple of years. So the writing is on the wall there. The Aussie, and I'll show you the charts in a minute, is really sort of buckling at its knees, right? But that sets us up for weaker or stronger numbers going forward from there as well. US building permits, housing starts, not too different to what we were expecting. Japanese inflation as expected, but then we come down a little bit further, because the market, what I'm seeing is the market is reacting very well to, as I said, a lot of the peripheral numbers. Now, you come into sterling, right? This is the weakest number since 2021. I'm surprised sterling isn't staying a little bit lower. I know the inflation numbers were a little bit stronger and all that sort of stuff, but minus 3.2% month on month versus minus 0.5. Don't forget, and even with the Canadian retail sales and all the other retail sales numbers, we are coming out of the biggest seasonal retail sales boost, right? The holiday period, Christmas, all this sort of stuff. Everyone's buying things. So you know what? If the UK are having their worst retail sales numbers through that period, I'll tell you what, the writing is on the wall. And this actually resonated through Canada there with their retail sales numbers. Minus 0.5 versus minus 0.1 expected. So what does that tell me? It tells me that the US economy is pretty balanced just at the moment. And Australia, UK, Canada, New Zealand, I tell you what, the writing is on the wall here. These are the countries that we thought might be, sort of stagnant with their interest rate sort of cycles. I think we might start to see their central banks start to factor in some cuts. Now, let me just quickly run through what we've got this week. Not a lot, right? Tuesday, if you're looking at the high impacting numbers, these ones in red. Okay, now business confidence numbers. Yeah, sure, you could have a look. BOJ interest rate decision, I'm not expecting anything there. And then you sort of really got to come down to, as I said, lift up the hood of the car to see what's going on. You got a lot of good second tier numbers here across Europe. some PMI numbers out of the UK, which will be important. But the big hitting stuff is the Bank of Canada interest rate decision. Now, they've got a little bit to sort of manage. And that goes back to last week's numbers. Inflation, yeah, it's sort of there bubbling away a bit, but retail sales weaker, right? So what do you do with that? That sort of keeps them on the sidelines, I would think, or be very nervous. Then you come into the big trade days this week, Thursday and Friday, right? The writing's on the wall. You got the ECB interest rate decision, no change expected there till probably September. We do have the US durable goods GDP numbers. They may confirm that the Fed is on hold for a little bit longer. And if that's the case, you're looking to sell Euro, Sterling, Aussie, Kiwi, CAD, right? And that's where we are. And then you got the ECB press conference. You come into Friday, and this is the real sort of big number here, the PCE price index, right? Big inflation number the Fed watches very closely. Then you got personal income and personal spending there as well. Okay. And obviously pending home sales. So really, what are we looking at? Well, it's a situation where if I just bring you back over to the charts. Okay. So having a look around here, you can sort of obviously see very clearly when you line your majors up on the charts, see very clearly the US dollar is moving to the top side. But, Euro's dragging the chain. And that's because we've had a bit of a mixed data. We did see a bit of a knee-jerk reaction down here on sterling, but it's sort of steadied itself. The real pressure points are here on the Aussie and Kiwi, really sort of showing signs that those economies are like stalling to a massive halt, right? So that gives us something to work with because, the numbers will be much more reactionary there. I think Euro and sterling have got a lot of room to catch up with the Aussie and Kiwi, but this week's data, we'll have to keep an eye on that as we go through the week to see how that plays out. Well, we'll get some PMI numbers out of the UK, but the UK's direction is pretty much going to come from the US dollar this week. Bank of Canada interest rate decision, ECB, they're the main events at this point, right? So if you're looking to sort of work out and why I'm looking at the second tier and top tier numbers is because I don't want you to sort of focus just on opportunities, the really aggressive, violent moving numbers, right? They do create opportunities if it fits in with what's happening on the trend, but don't get sucked into that because there are other numbers here that can sort of piece things together, right? And that's why we look at the economic fundamentals as a complete package, not just from the big directional ones. To me, retail sales and unemployment are the two numbers that are going to really become more prevalent. I have to say unemployment always is there at the forefront, but retail sales now, it's showing us where spending is dropping very quickly. That's going to be a huge drop in inflation and then leads to higher unemployment. So keep an eye on that as we go through the week. I'll keep you in tune where I see the best trading opportunities coming up. If anything, I'm sort of looking across the hourly charts and then back onto the daily charts to try and sort of work out, is anything really significantly moving, right? And you can see on Euro, same as the dollar index, you've got sort of mid-range at the moment. And that sets us up for good trading going forward. Same with sterling, right? Aussie and Kiwi have got bigger ranges at this point. So probably a little bit harder to quantify sort of the entry levels. Dollar Swiss, a bit of a relief rally. We'll see how the dollar plays out there. Dollar yen still won't give up the ghost. And dollar CAD, well, I tell you what, those CAD retail sales numbers could be the writing on the wall that there's some really serious hard times coming up for that. But the key point here is keeping a very close eye on your daily charts, on the bigger trend lines, your day-to-day action, obviously the hourly charts. You could do with some pretty good refreshes here. I'll be just doing this myself, is tuning up your hourly charts to make sure you've got the new support and resistance levels on your charts, right? That's all you got to do Monday. Tune up, see where that momentum is, look where the key momentum drivers are going to come from, and that's your calendar, and that's all she's got. All right. So plan out your opportunities. Don't just sort of trade for the sake of it. Make sure you're trading with direction and or with clear momentum, and that comes from your calendar. All right, guys, all the best. Good luck. Cheerio.